insurance claims. Insurance claims is a very nice topic. Requires no particular format or journal entry to be marked up, no particular format of preparing accounts and all that. So fairly a very simple topic, but at the same time there are a lot of thrilling moments that we have. Let's know the background of insurance claims. Whether he is a proprietary setup, that is businesses, whether it is a proprietary setup or a partnership setup or a joint stock company. For that matter, you will have on the asset side many items, on the liability side many items. Of the two, which one is directly contributing towards the profit generation, asset or the liability? Come on, asset or liability? Which one is directly working for the profit of the organization? Asset. How? Machinery is being used for manufacturing. Without machinery, you would not be just doing that. To buy the asset, you require liability. So I would say the one that is directly contributing for the generation of profit is asset, indirectly liabilities. Now, asset and the liability will be independently working. I mean, there is a chance that asset may be there, liability may not be there. How come? We have an asset, there is an asset costing 30 lakhs. I would have contributed 10 lakhs. I would have borrowed 20 lakhs. I would have used this machinery to generate profit. From the profit, I would have repaid 20 lakhs of liabilities. Now, after the exit of liability, asset will continue to be there. Correct? After the exit of liability, because of repayment, asset will continue to be there. So, asset will be there, liability will be there. But they are not dependent, they are independent. That is one possibility. Another possibility is that liability will be there, asset would have gone out. How? Asset accidentally they would have lost. Accidental loss of asset. So asset may not be there, liability would be there. Which of the two scenario is better for a businessman? Accidental loss of liability, possibility is there or not? Answer to that question is in the negative. No, there is no such possibility at all. Even if our creditor from whom we have got a credit or the banker from whom we have got the money, if that bank is going for liquidation, closely follow, the liquidator will catch you. There is no way a liability will go off. The chances being 0.001%. So liability will go off only through repayment. Asset will go off not on account of using it in a very great extent. Accidental loss possible. So of the two, the matter which is worrisome is loss of asset. Correct? Loss of asset is worrisome. When it is really a worrisome matter, if there is any insurance policy to cover such losses, if there is an insurance policy to cover such losses, businessman would be happy. Correct? What is that? Do you understand now? So, loss of liability is not possible. Loss of asset is possible. If there is an insurance policy to cover up such losses, then businessman would be happy to cover such loss. The insurance company will pay for that. And therefore, businessman is protected from any accidental loss. Now, can you give an examples for assets exposed to accidental loss? I am not asking example for accidental loss. Example for assets exposed to accidental loss. Don't say fire. Fire is a cause of accident, but I am asking example of assets exposed to accidental loss. Machinery, stock, building, vehicle, debtors. So machinery may be on account of fire, earthquake, stock similarly, building similarly, including terrorist attack. vehicle, accident involving, that is in the road accident, debtors, insolvency. So this insolvency might also be costing on account of accidental loss in the place where our customer is carrying on the business. Do you have insurance policy for that? Policy available for that? You have to say yes or no. Yes. Stock? Yes. Building? Yes. Vehicle? Yes. Debtors? No. So therefore, loss of debtors will not be covered in this topic. Assessment of loss possible? If so, easy or difficult? Easy. How come? Costless depreciation. Correct. There is a value at which you take it up stock. For this, I would say vehicle, but in this case, not possible. It is not costless depreciation. Not easy. Correct. Here it is not applicable. Are you understanding? Now, when you say not easy, it is not easy to assess the value of stock lost in accident, because stock is ever changing at all points of time during a day. How come? Raw material is being issued to production at all times during a day, with many items bought and replenished. Then work in progress. Finished goods. When compared to other items of assets. These accidental losses can be divided into two parts. One is tangible loss, the other one is intangible loss. What is tangible loss and what do you mean by intangible loss? What is tangible loss and what is intangible loss? Tangible loss are those items that we were talking about: building, machinery, vehicle, stock, etc. These are all tangible losses. You know this is the item of stock and that you have lost. In that we are giving importance only to stock. What do you mean by intangible loss? What do you mean by intangible loss? In cinema, you just find the hero wants to get into police force. Okay, the villain will also be another policeman. So the villain will prevent the hero to come to police force. He will do a lot of mischievous thing and beat him with people and all that. So he will also hit the henchmen and all that. But ultimately, he will also be limping. With a person who is limping, whether he can join police force? No. How much time it will take for hero to recoup and come for the test and to fight once again? How much time it will take for hero to do that? 5 minutes only. How 5 minutes only? There will be one song they will be playing. Correct. He will go for some gym or some therapy, and the heroine will also be standing beside him, and family members will support him. Within 5 minutes, the hero who was just beaten up to pulp will become a rock solid Iron Man. Have you seen that sort of movies and all that? Every movie is like that. So it takes only 5 minutes for them to recoup. But in practice, what happens when a building was accidentally lost? Not fully, a portion which there is fire gutted that particular place. So some machinery lost, some stock were lost. How much time it will take for the company to recoup, to restore to the original position? Here, there is no hero like he'll just do a lot of workouts within a span of 5 minutes. A nice song will be there and he'll become all right within 5 minutes. But that 5 minutes time, they will say it is 6 months period. Correct. So the business will be dislocated soon after the accident. Okay, I will put it like this way. So normal activity is happening. Some accident has happened. Okay. And the business will be limping, and after that point of time it will be consistent. Like this is before accident, this is period of dislocation, and this is a period of normalcy return. Normalcy. So this period is the one that we are talking about here in the previous page. Intangible. What is that intangible? Intangible is consequential loss of profit. What do you mean by consequential loss of profit? The company would have earned some amount of profit, some profit, so which you call it out as loss of profit. What is it you call it out as? Loss of profit. That amount of profit that we would have made, we are unable to make now because of the accident. Correct? Are you understanding? This particular portion cannot be considered as a tangible loss. It is a loss suffered. This portion is what we call it out as intangible loss. So in insurance claims, we take up two things: loss of stock, then loss of profit. This is the background as why we should focus on these two areas.